Hello, everyone, and welcome to this session on Peak's Q1 results. We're very excited about this call, and we're very happy with the number of attendees attending this session. My name is Barry Ellison. I'm the Director of Marketing Communications for Peak. And with me, I have Johnson Joseph, who is our CEO at Peak, and we have Jean Landreville, who is our CFO. They will be walking you through the Q1 results in just a few minutes after I talk to you about how this session is going to be managed. But just before moving forward, just a quick disclosure statement. We'd just like to remind everyone on this call that any statements during this session, whether it be with regard to future financial results or industry prospects, that's all forward-looking statements. Now, with that done, a few words on how the session is going to be managed. There will be a live Q&A session after the presentation by Johnson and Jean. We are taking questions. Please ensure that the questions are posted in the Q&A section. Try to avoid any questions in the chat. Once we get the Q&A questions, we are actually going through them, we're sorting them and reviewing them so that we'll be well prepared for the live Q&A session, which will happen just after this presentation. You can also, for example, you can view this presentation after the fact. This session is being recorded and will be made available right after. And we estimate that this session could last it could be up to 45 minutes, but it really based on the number of questions that we will receive. So with that, I'd just like to turn it over to Johnson at this point, and looking forward to your questions on Q1 results.
Okay. Thank you, Barry. Welcome, everyone. Good to be here. Good to be with you. I know there's just before we get started on the Q1 results, I just want to make a quick mention about what I believe a lot of investors are having questions about, which is the Prospectus offering that we currently have pending. Just so that you know, we are working with the regulators. We're making good progress, and we expect to make an official announcement in due time. So things are going well. We're very excited. The regulators have been working with us, not against us. So it's a process. It's a long process. We understand that, but everything is going according to the regular course of actions. There were certain things that we needed to address. I'm sure you've seen that there were a couple of financial statements, MD&As that needed to be amended and restated. So it's all about disclosure. We learned a few things during the process. We're continuing to learn during the process. And at the end of the day, it's going to benefit all stakeholders. So Peak is going to be a better company for it. And as investors and shareholders, you're going to have better disclosure. So we learned a few things about IFRS disclosure, about securities rules, and so on and so forth. We've made the adjustments and the restated documentation. So we're going to continue to do that. And hopefully we will have some news on the Prospectus offering sooner rather than later. Now, with that being said, we're obviously very excited about the Q1 results. If you are familiar with the company's history, you know that Q1 is typically the quarter where we just kind of like, it's a warm-up for us. We get started, we kind of like stretch out our legs. It's not the biggest quarter of the year. I know that there are expectations out there for a certain level of revenue, and some people may be disappointed that they're not seeing like a huge number in Q1. But again, Q1 typically is the quarter where we basically just get started, we warm up, and then things get better and better as the year goes on. Now, there are a couple of things, a couple of important takeaways that I'd like to point out for Q1. First of all is, again, we see that there are big numbers with the supply chain services. I'd like to reiterate what supply chain services mean for us. Yes, the numbers are big. There are expenses related to offering the supply chain services. Slowly but surely, some of those expenses are being assumed by our Gold River platform. There is a little bit more transition happening in Q1, but we're not at the point yet where we see dramatic decreases in the cost of service expenses related to the supply chain services. Now, the other thing that the supply chain does for us is a lot of the supply chain clients refer distributor and retailer clients to us. And that allowed us to get into a different, so to speak, a different type of revenue segment for us. So we've created some targeted financing programs for retailers, distributors. Again, a company called BDC, which is a huge consumer electronics distributor. The program that we created for them and for the packaged foods distributor back in 2020, at the end of 2020, really started to gain some steam in Q1, which is very, very encouraging for us. The other important thing I will mention about those targeted programs is the program where we help social media influencers finance their shows. That program really surprised us in terms of the number of transactions that were generated during the quarter, and the dollar value is also increasing. So very important takeaway in Q1 is the proliferation of those programs where we don't have costs of services associated with them. So as more and more transactions occur through these targeted programs, we're going to see more profitability for the company going forward. Another important key takeaway during the quarter is the emergence of the Gold River platform. Now, we talked about Gold River being a gateway for a lot of these distributors and retailers to interface with the lending hub. And in particular, what we saw in Q1 was the program that we created specifically for JD.com suppliers and retailers. That program also had a lot of success during the quarter, and we expect that to continue. So a lot of transactions happen through Gold River. Gold River actually allowed our Asia Synergy Technologies subsidiary to generate its first revenue since the past 3 years. AST was on standby while we made adjustments to Gold River. But now that those adjustments are done and Gold River is fully integrated into the lending hub, expect to see more revenue coming from AST and from Gold River. So again, overall, the performance, we were very, very pleased with the performance of the first quarter, generated $14.2 million in revenue, positive EBITDA, and we expect the trend of positive EBITDA to continue. In fact, we suspect that Q1, not just EBITDA, but on a net income basis, we expect Q2 to be profitable for us. Very important takeaway also during the quarter, although there were not any transactions related to those two agreements, but they are major agreements for us. I'm talking about the agreement that we signed with ShopEx, which is the leading provider of software for e-commerce retailers in China. And that agreement alone gives us an opportunity to dramatically increase the number of clients that we will have on Lending Hub over the next few months, quarters, and more than likely over the next years. There are really, the number is so large, I don't want to say the number here during this call, but there are, let's just say a very, very large number of clients that could potentially come on the platform through the ShopEx deal over the next few quarters. The second partnership that we worked on in Q1 was the partnership with China UnionPay. Don't want to spend too much time talking about the importance of that agreement for us, but that gives us the ability to settle transactions, transfer funds, and adds a whole new dimension to everything that we're doing on Lending Hub on Gold River and throughout our whole ecosystem. Now, the integration work with China UnionPay, I'm very happy to say, for all intents and purposes, has been completed. We have not made any announcements yet in terms of transactions, but we did test some live transactions very recently on the China UnionPay network, where we settled transactions and we transferred funds from different accounts. So you can expect an announcement to be made about that in the coming weeks, very quickly, about the first transactions being done through the China UnionPay. Again, this is a big revenue generator for us in the future, but also it brings a whole new dimension to the company, additional value-added services, and so on and so forth. So to sum it up, again, very, very excited about the first quarter. We're just getting warmed up, and much, much bigger things to come in the quarters ahead, including seeing profitability in the not so distant future. Now, with that being said, I will turn it over to Jean to get into some of the specific numbers about the quarter, and then I will come back after Jean's presentation on a couple more topics that I want to bring, that I want to discuss here during this call. Jean?
Thanks, Johnson, and welcome everybody. So I'm going to make a quick overview of the Q1 results. Like Johnson said, we're very pleased to see that after 3 years, ASST platform come back, and we have some revenue, not much, 100,000 during the quarter, but we expect that to increase sharply in the next coming quarter. The variance for the quarter is $10 million, mainly from the supply chain business and the cost that is related to it. Increase a little bit in the margin. As you know, the margin on the supply chain business is not very high. There was a slight increase in, between Q1 of this year and last year, but not enough to make that very sufficient to bring a lot of profit to the organization. One thing I would like to mention is the ESFC revenue. We have some question and comment there. The revenue is lower this quarter than it was last year, and this is the continue of the trend of last year. 2-3 things. Last year was really affected by the pandemic at the SFC, and you see that in the expense, the expected credit loss expense. Last year, that was 360,000. That directly related to the SFC loan. Okay, that was so the payment was longer, so we need to take a provision. Again, this is not a loss; this is a provision, like for the older guy, the provision for bad debt. We have to take this provision because we have some value to put in, and the risk was higher. You can compare that this year with 20,000. So the risk profile changed a lot at the SFC. That was the management call, and it was a good call. So they changed their profile from second-hand loan for cars to real estate and some credit. The credit loan are guaranteed at 100% by our partner. So my credit risk is much lower. So that's why the expected credit loss provision I need to take is much lower. So at the end, saying that we have less revenue, but the risk profile is lower and the expense is lower. So just to be clear for everybody, ASFC is still a very profitable business for us. At the end, EBITDA is positive at the same level, if it's not higher than last year. They manage their fixed costs sharply, and they reduce the risk, including the expected credit loss. So revenue, 10 million more from ASSC mainly. Good takeaways, the coming back on the ASST platform with a very, very good margin. I cannot have the sense of the margin now because it's too early in the process, but obviously this is Fintech business revenue. Margin is quite higher, very high. So we're expecting good margin on this one. So that was for the on the revenue. On the expense side, well, the cost of service higher, it's following the revenue from the supply chain. Salary and fringe benefits, 2-3 things there. So it was salary adjustment last year for management. And the major variance coming from the share-based expense, which is the stock option for employee and key employee and board members, because of share price is higher, the cost is higher. So this is not cash. It's not cash as option for management. So that's mainly the big explanation for the variation in the salary and fringe. Same thing for the board remuneration. There's small at the end of Q4, a small amount of fees is paid to the board member that was not there before, and the share-based expense is higher as per for the employee. So when we issue a stock option, we have it for the board and the management. The other big thing, professional fees. So I think you can imagine that what we're doing, the process that we're doing with the regulator and to get on the market, stock market, and OTC and NASDAQ brings a lot of professional fee. So it's lawyer fees increasing, auditors fee for sure. And auditors, we have more business, so the price is higher. We have more business in China. So this is increasing the expense sharply. And on the professional fee, we hire some external consultant to get some help in Canada and China. So we have expense to search for people to help us, me and Johnson and the two person in China, because we're at the stage that we need to build the team here. So we have some expense from outside professional fees. The rest, okay. The other thing to point out, finance costs. So finance costs, I'm happy to say that in Q1, we paid the last debenture that we have issuance. So it was the last one that we pay in Q1. So we don't have any more debenture to pay. So this is affecting positively, obviously, the finance cost, which is lower than last year. The attrition and the interest that is paid on these on this debenture. Now we have only a bond that is there for 2.5 years yet for 400,000 only. So on the debt side, we're in a better shape than it was before, a lot better. Like I explained, the expected credit loss, the lower is because of ESFC, the change in the mix of the loan. That's have a positive impact on the expense. Stock exchange, we go on the OTCQX during Q2 of 2020, and we have some prepaid expense for the NASDAQ. So that's increased the stock exchange and transfer costs. Last thing, positive variation again, is the expiration of, there was a different finance cost in the balance sheet since 2018 from a finance deal that was there in 2017. And it was in stock in the balance sheet, and we decided to not continue with this supplier of finance, and so we have to get off of the asset that we have on the book. So that's why we have an expiration of different finance costs of 350 last year that we don't have this year. So with all this, we have a loss before income tax of 87,000, which is close to break even, versus 651 of last year. We're going to see the Q&A, and we're going to be happy to answer some question on this. On the EBITDA, with the adjustment of the 352 I just explained, which is not a cash, and it's not usual expense that we don't have next year. So we take the adjusted EBITDA, it's about the same amount. So 120 versus 172. Before that, we have a positive EBITDA of 121 versus a loss of 181 last year. So it's going in the right direction. Like Johnson said, Q1 is, we don't have a lot of high expectation around Q1 because in China, they're closed for 2 weeks. So there's nothing happening in China with the Chinese New Year in February. So this is why the expectation in Q1 is slow. So we're hoping Q2 is looking good. So hope we're going to have a good discussion at the end of Q2 for the financial. So I'm going to turn that's all for me. So I'm going to turn that to Johnson, I believe. What for the Q&A or Johnson?
Yeah, we're ready for the Q&A. I'll come back and just for closing comments after the Q&A.
Got it.
Thank you.
Got it. All righty, Johnson. A lot of the folks here are chiming in about Gold River and some of the cost savings from that. So, could you comment about just sort of the expectations for the cost savings, the margin profile, and revenue mix? How you see that playing out over the course of the year, how you see that shifting from so heavy in the supply chain segment, and sort of what you picture in terms of other verticals catching up and what that looks like throughout 2021.
Okay, sure. Now, the strategy behind the supply chain was always to find a way to get a large number of clients. So the supply chain clients, raw material suppliers and factories have a lot of distributor clients, retailer clients. So it was a way for us to get at those retailers and distributors. Now, in terms of the actual supply chain service itself, when we finance supply chain transactions, oftentimes the material itself will need shipping. It'll need logistics software to keep track of it, keeping track of inventory. It will need to be warehoused. So we've partnered with some service providers to provide logistics software, shipping, and warehousing. So we sell a financial service bundle to supply chain clients. Now, some of the expenses related to providing those services, as I mentioned before, were being provided by third parties, right? So we don't want to be in the business of warehousing and shipping, but the logistics software is something that our Gold River platform is able to provide. The fees associated with that side of the business is being assumed slowly by our Gold River platform. Now, the cost savings that we can expect to realize when Gold River fully takes over those services should be at around, I'd say like 30%. So the margins that we're making right now on the supply chain services are very, very slim, but those margins will be scaling up to a maximum of 30% eventually, that we will make on the supply chain services. Now, the other aspect of our business is that soon the supply chain transactions will represent a smaller percentage of the overall transactions conducted within our ecosystem. Currently, the vast majority of transactions are supply chain related transactions, but with programs such as the programs for the social media influencers, the programs for the JD.com distributors, the BDC, and pretty much all future clients who join the ecosystem, those transactions will eventually, I don't want to say dwarf, but they will be significantly more higher in terms of percentage than the supply chain transactions right now. So we started off with a lot of supply chain transactions, but eventually those other transactions will make up the bulk of the transactions on the platform, and the margins on those other transactions are anywhere between 50, sometimes 60%, like overall. So that's why we're going to get into our forecast in a few minutes. But eventually, when you're looking at this company 2-3 years down the line, the overall profit margin of the company will be around 50 to 60%.
Wow. Okay. Yeah, great. Thanks for that. And just revenue generation in regards to North America. I believe we said that it was expected to commence during summer 2021. And in what capacity do you expect that to occur, and what sort of verticals do you expect to pick up?
Okay. The the revenue is coming from North America. I mean, the expansion to North America is tied into the company's relationship with Kubler, right? So, as people know, we're expecting to come to an agreement with Kubler in order to be able to expand the services to North America. The model in North America we expect will be slightly different than it is in China. There will be more emphasis put on the data accumulated throughout the ecosystem. So I can't say too much more about that right now, but in terms of timing, couple of dominoes need to fall into place first. I hate to go back to it, but we first need to close the prospectus financing, get that out of the way. That's the first domino that needs to fall. After which, we're going to be in position to finalize or at least resume the discussions with Kubler. Once we have an agreement into place and the coast is clear for us to expand to North America, then we're gonna be in a position to talk a little bit more about that. But so far, we first have to make sure that there's a deal in place between Peak and Kubler, and then in terms of timing, summer, maybe late summer right now, because honestly, like I mean, we weren't expecting the delay that we ran into with the prospectus, so that put that plan back by maybe 30 days or something like that. But we're still very hopeful that we'll be able to make our entry into North America by late summer, early fall.
Okay, great. And next question might be for Jean. There's a 26 million accounts receivable on the balance sheet. Could you elaborate on that? Why it's such a large amount?
The amount is coming mainly two things in Q1. The first one is the supply chain, so the supply chain, so receivable, which is connected directly with the account, which is about the same amount. So it's the same process. So in terms of cash, we have the same amount sitting there, the payable regarding SSC. The other thing was an initiative to start the business on the platform in China, where we make an advance to a company of $4 million. This advance is not almost guaranteed and is already paid back. And it will enable the team in China and the partner to start transaction on the platform. So that will be great, but that explains a $4 million or $27 million.
Okay, thank you. And in terms of some of your new customer base and the growth, how do you see seasonality in that? And do you expect it? Is it, or what? Can you add some color behind that?
Sure. Honestly, other than the Chinese New Year festival, where business in China overall slows down for about a month, there's no seasonality to our business. I mean, so long as people are buying goods, they will need credit. They need to replenish inventories, whatever. There are so many applications for which people will need funding. We're always there. So we don't expect seasonality to affect our business at all. Now, in terms of how quickly we're able to scale, that really depends on the financial resources at our disposal. Marketing, expanding to new centers. For example, we recently opened a new office in Beijing. We haven't made an official announcement yet about that office. But we expect to have much more of a presence in larger centers such as Shanghai, Beijing, and in the Guangdong area as well. So in terms of client acquisition, we have the partnerships in place. I mentioned ShopEX before. I mean, they have millions of retailers who are using their application. We do have an API link to the ShopEX software, so we have a joint marketing agreement in place. So they're going to start to market our services to their clients pretty soon. So all of this can scale up pretty quickly. but we have to make sure we have the financial means to be able to manage that growth. And that's one of the reasons why that prospectus financing is so important for us. There's a lot of opportunities in front of us. We're dealing with big players such as China UnionPay. The relationship with UnionPay is great right now. The transactions are expected to scale up. We will need to have the personnel, the different offices to be able to manage that growth. So it's all in front of us right now. We just have to make sure we're in position to take advantage of these opportunities.
Okay, perfect. And about the JD.com cash advance program, are you able to kind of break that down between the number of suppliers that have applied to date, how many suppliers are on the platform, or versus how many are eligible? Like any kind of color behind that?
It's hard for me to really pinpoint the number of clients that are on there right now. I know that JD, there's well over 1 million clients on JD.com itself. Now, how many are on our platform right now? I haven't looked, unfortunately, I haven't looked at the last KPI numbers that came from China. So I don't want to put out, say a number out there and then it turns out to be totally wrong. But I do see the number of transactions they've been scaling up. I can say that JD.com accounted for, I would say, 25 to 30% of the transactions that were done during the quarter came from JD.com clients.
Okay, really good. And with respect to customer acquisitions and distribution and retail space, how should investors kind of think about end user adoption rates for net new clients?
End user adoption rates. That's an excellent question, and I think it's just a matter. If you understand the retail business, right? I mean, I don't think there's a sector that is better suited for our services. Okay, because retailers are constantly they have to replenish inventory, right? And they have cash flow issues, particularly in China. If you're dealing with a larger supplier, they will give you terms that are beneficial to them, right? So you may sell to them and they take their sweet time paying you back. Meanwhile, you need cash, right? So you've made the sale, you need cash to continue to grow your business, buy more inventory. So in terms of client adoption rate, I think it's a matter of making sure that these clients are aware of the service. That's why joint marketing efforts with ShopEX are going to be very important in the future. There's still a lot of clients right now that are using ShopEX software. I mean, we just started with them that are not aware of our services. So there are clients at JD.com, at all of these different places that could benefit from our services, but they're just not aware, right, that these services are available to them. And the beauty about what we're offering is that there is no, how can I put this? You only pay if you use the service, right? So you have nothing to lose by joining the ecosystem, giving access to your data, see if you qualify for funding. There are no obligations. You only pay for what you use, right? So I think it's just a matter of people being aware of the service. For example, when we launched the program for the BDC clients, the consumer electronics products. Now, just to test it out, BDC put out word to a few clients that the service was available, and that it actually caught us off guard. I don't know if some of our investors will recall that we actually put out a press release within days of the service being available because some BDC clients had an urgent need for, I believe, Jean, it was iPhones or something like that they had an opportunity to get their hands on some iPhones for cheap. They needed the funding, and they're like, well, we hadn't finished the integration yet with the BDC systems, so the program technically was not operational as it's operating right now. But they got word of the service, and they inquired if they could have access to funding right away, and we did something where we allowed them to get funding through the platform without the full integration of the system yet. So this is just to let you know, this is just an example, so that you can see that the demand is there. It's really just a matter of getting out there, spending the dollars on the marketing, doing what we need to do with our partners in order to get the word out. And I think we can expect to see a fairly high adoption rate. Again, they have nothing to lose by joining.
Okay, great, thank you. Got a question on Grupo Coin and just revenue from that, or just an update and in more general terms too, about the revenue breakdown between verticals. If you could add some detail behind that.
Sure. Grupo Coin. It turns out that that program was more about the social media influencers that were pushing Grupo Coin's products in China than Grupo Coin itself. So that the Grupo Coin deal really has morphed into the social media financing program. So this is a program specifically for social media influencers who, as I mentioned in the past, they have become a force in the retail world in China. So they're out there having these shows, and they're showcasing all these products, and they're pushing a lot of products that way, including Grupo Coin, right? So the program is more about the social medias than it is about Grupo Coin. That being said, it's been, like I mentioned earlier, it's very, very it's been very, very successful, surprisingly, for us. One of the things that was surprising was, well, we should have known, but during the Chinese New Year, where most businesses stop, these social media influencers were still holding shows. Actually, they took advantage of the fact that people were on break and people needed to buy gifts for family members or whatever, loved ones or whatever, and they basically put on a lot of shows. So the social media influencer program we believe is going to continue to be very, very beneficial for us.
Awesome. Okay. Can you talk about more of a large theme question, but talk about expansion into cities like Shanghai and Beijing? What kind of avenues you foresee, partnerships, or just your vision for that and timeline?
Okay, sure. Jinshar, I know that we haven't been talking too much about Jinshar lately, but Jinshar is the loan brokerage platform that we signed an agreement to acquire back in 2019. We worked really hard to integrate that platform into the Kubla Lending Hub. Jinshar's got a lot of brokers in all of these cities that are using the Jinshar application. So we expect Jinshar to be an avenue of growth and expansion for us, at least a door opener into these markets. So Jinshar was already in Beijing and Shanghai, and we will leverage those relationships in order to get there. But what we have seen also is the partnerships that we've made recently with, again, going back to ShopEX and China UnionPay. They want us, they have presences in those big cities. And since we're supposed to be, I guess, not just business partners, but really technology partners with those companies, I think it would be to our benefit to have offices, satellite development, I guess, R&D offices in those cities, as well as physical offices, business offices in those cities. So it's going to take a little bit of money. You don't just go into Shanghai and into Beijing with one or two people. You have to have staff over there. You have to have, I guess, talented people who are going to be able to manage your operations over there. So again, that's all part of the need for capital and the expansions that we want to do. So again, going back to this Prospectus offering, it's something that's going to be very key for us in order to allow us to develop and to expand at the rate that we believe that the company can expand. Now, mind you, it's not all or nothing for us. Even without the Prospectus, and I'm not suggesting for 1 second that the Prospectus is not going to happen, but because of the delays that we've had, we've kind of had to adjust a little bit, In terms of timing, we're hoping to have more of a presence already in Beijing. But unfortunately, the prospectus offering is taking a little bit longer than expected. So, but eventually we will be there. We expect to have the capital that we need in order to expand into those centers properly.
Okay. Okay, good. And next question is regards to data monetization. Just any kind of comments on when you think that might commence and, potential impact on expected revenue?
Yes, that's very interesting. That'll kind of like get us into our forecast discussion. As I mentioned earlier, the business model, the company's business model, when we come to North America, will be slightly different than it is in China. It's really going to be predicated on data. I can't I don't want to say trade secrets or whatever, but we do have certain applications that we're going to be developing around our data that are going to create entirely new revenue streams for us. So until we actually come to North America, I'd rather not discuss that. But in terms of revenue generation, the revenue that would be generated by this new model would equal what we are expecting to have, what we're generating right now, with the model that we have in China.
Okay, great. Yeah, you know what, guys? I think we touched on most of the theme questions, the high level stuff. So Johnson, I'll conclude the Q&A and turn it back to you for your outlook and any other comments.
Okay, great. A couple of things I want to mention is I know that investors have been patiently waiting for a forecast, and we have been dealing with Q1 filings, Q4 filings, prospectus offering. So we haven't had too much time to focus on the forecast, but we are going to be doing that probably in the next couple of weeks or so. Certainly, we expect to have numbers out before the end of the month of June at the very latest, more than likely before that. Also want to mention one last thing about the prospectus offering. Again, going back to our dealings with the regulators, just want to make sure that people understand out there, the regulators have been very, very helpful. They are helping us get through the process as quickly as possible. At the end of the day, we will come out of this process a much better company than we went into it. So just be a little bit more patient in terms of how our business was impacted by the delay and the prospectus offering. Honestly, so far, there has not been too much of an impact. We still figure to do about the same amount of revenue that we would have forecasted before the prospectus offering. So there hasn't been any impact on our revenue forecast right now with the prospectus offering. So I just wanted to make sure that everybody understands that. I will conclude by saying that I know I've said this in the past, but each time we get closer, the company keeps progressing. Every quarter is better than the next one. If you look at the company's balance sheet, financial statements, you see gradual improvement. I think 2021 should be a very special year for Peak on so many different levels in terms of revenue, profit. The expansion outside of China, I think, is going to be a very, very important milestone for us. And just in general, the way the company is perceived, I think, is going to change. So I personally think that, there's no better time, to be a Peak shareholder. And I certainly am very, very excited as the company's CEO for the future. So that being said, I want to thank everybody for taking the time I don't know how many people were on this conference call here, but I really, really love the enthusiasm that I'm hearing from all of our shareholders. Believe me, we have that same enthusiasm. China's excited. Our board of directors is excited. Management team. We're continuing to add talent to the management team. We just added Barry Ellison, who's going to be handling our marketing and communications. So expect to see a lot more of Barry in the coming weeks and months. And also expect to see announcements about talented executives and individuals joining the company in the future. So I'll turn it over to you, Barry. That's it for me. And once again, thank you, everybody.
Thank you, Jonathan. Thank you, Jean. It was an excellent presentation, and very happy to see the number of questions. We did receive a lot of questions. Any unanswered questions, we will follow up with you separately via email. And like I mentioned earlier, this session is being recorded, so it's also available for you to review at a later point in time. So with that, thank you very much for everyone who's attended. Much appreciated, and you'll hear from us soon. Thank you.